A very good morning to you and welcome to the Morning Outlook Report. I'm Rachel Jones reporting live from Kalkine Studios. The Australian share market is set to open higher this morning following a strong night on Wall Street. According to the latest SPI futures, the ASX 200 is expected to open 0.4% or 30 points higher. Yesterday, at the closing bell, the S&P ASX 200 was 1.1% higher or 81 points higher at 7,268. The best performing sector yesterday was the tech sector, up 4.2%. The worst performing sector was materials, down 0.6%. The best performing stock yesterday was Computershare. Their shares closed 11.2% higher at $22.17. The worst performing stock was Mineral Resources. Their shares closed 8.9% lower at $52.72. Looking to some big news from this morning, and the NAB reported unaudited statutory net profit of $1.8 billion. Cash earnings increased 12% compared with the quarterly average of the second half of 2021. NAB's net interest margin has declined by 5 basis points to 1.64% during the first quarter of the year. In Australia, over the 3 months to December 2021, home lending grew 2.6% and SME business lending increased 3.4%. And they gained market share across their core lending and deposit products. New Zealand loan growth was also strong at 2.2% over the same period. Moving on, an AMP has reported a $252 million loss for the 2021 financial year, with revenue declining slightly through the last 12 months. Revenue from continuing operations slid 3% to $3.3 billion, while net profit after tax fell to $252 million loss, down on the $177 million profit it reported last year. AMP Bank net profit increased by 38% to $153 million, while Australian wealth management total assets under management rose 8% to $134 billion, and that was due to improved investment in the markets. The company did not declare a dividend. And the ASX has raised its dividend following a strong start to the 2022 financial year, with its revenue and profit both rising. Revenue from ordinary activities climbed 4.1% to $527.8 million, while net profit firmed 4.1% to $360.1 million. ASX also announced this morning that Managing Director and Chief Executive Officer Dominic Stevens has announced his intention to retire this year. He'll stay on until a successor has been found. Well, now it's time for a very short break, but stay tuned to Kalkine for more news set to affect your trading day.
Hi, I'm Sage, and get ready to take the crypto ride with me on Kalkine TV. Watch the Crypto Buzz every Tuesday and join the excitement at Kalkine TV. From Bitcoins to NFTs to Dogecoin and DeFi, we have updates about everything around these digital currencies. Understand the investing rationale and the risks involved in the space with me, Sage, on Crypto Buzz. Keep watching Kalkine TV.
And welcome back to the Morning Outlook Report. Let's look to the US now. And on Wall Street, the Dow Jones was up 0.86%. The S&P 500 rose 1.45%. And the Nasdaq rose 2.08% higher. Thursday's US Consumer Price Index could cement expectations that the Federal Reserve will raise rates next month. European stocks advanced on robust earnings as investors kept aside concerns about their surging interest rates. The stocks at 50 rose 1.8%, the FTSE went up 1.1%, the DAX advanced 1.7% and CAC ended 1.5% higher. MSCI's broadest index of Asia-Pacific shares outside of Japan was 1.8% more than a 2-week high, and the blue chip Nikkei closed just over 1% higher. Oil prices stabilized to around $90 a barrel as the prospect of increased supply from Iran and the US kept prices under pressure. Brent crude was last up 69 cents or 0.76% at $91.47 a barrel. WTI was last up 21 cents or 0.24% at $89.57 a barrel. Gold prices rose yesterday as a pullback in US Treasury yields and a weaker dollar offered support to the safe haven metal ahead of US inflation data. Spot gold prices rose $7.90 or 0.43% to $1,833 an ounce. Well, that's all for our Morning Outlook report here on Kalkine TV. Have a great day trading. Stay tuned to Kalkine for more market updates and economic news live throughout the day. This is Rachel signing off for now.